We're getting our first snapshot of the jobs market for the new year. The Bureau of Labor Statistics just released the latest report showing the U.S. added 130,000 jobs in January, while the unemployment rate dipped to 4.3%. Let's bring in Bankrate senior economic analyst Mark Hamrick for more. So, Mark, you say the job market in January looked better than expected, but the broader picture is less than bright. What do you mean by that?
January was an anomaly based on what we've seen of late, and so we got a better than expected number of jobs added in January, 130,000, but the average now for all of 2025 was 15,000 jobs added a month. In past years, we would have seen 150,000, 200,000 jobs added. So this has been a big transition period, but we'll take the good news for January when we can get it. The unemployment rate moved down a tenth to 4.3%. It was recently as high as 4.5 in November and 4.4 in December.
So there were some modest downward revisions to the previous 2 months, with November and December now showing some positive numbers. What do you make of how the job market has bounced back?
Let's see what happens in the coming months. I do think that there are some reasons to be optimistic or somewhat upbeat on the outlook for the job market going forward. As Federal Reserve Chairman Jerome Powell said recently, the acceleration of the economy has sort of eliminated some downside risk, but the irony, if you want to call it that, has been there hasn't been a great payoff with the number of jobs added, as we just referenced. Why be upbeat on the coming months? Well, a big part of that is that we'll have the positive impacts of the One Big Beautiful Bill. More money going into bank accounts, particularly with federal income tax refunds, and so consumers may feel a little flush, even though we know the number one complaint that consumers have right now really is at the top of the list, of course, affordability challenges resulting from higher prices, historically high inflation in recent years.
Let's talk about hiring. Hiring remains uneven, with the job growth still concentrated in some certain sectors. Which ones are those?
Yeah, it's really quite remarkable in the sense that if we didn't have the growth in healthcare hiring that we have had over the past year, we would have had a contraction in hiring in 2025. And so if you want to look to two-star sectors in the job market right now, healthcare number one, social assistance number two. We did see a bounce back in January for construction. That's welcome news, of course. A little bit of a positive showing in manufacturing, but manufacturing activity in the U.S. over the past year has been quite lackluster. And so when the job market was going great guns, so to speak, we'd see areas like leisure and hospitality, business and professional services, white-collar sectors of the economy, if you will, adding jobs. And one of those, for example, financial activities declined in January. We also saw government decline, where in some past months, at least government more broadly would be adding jobs. And we also saw part of that a decline in federal employment. That's been a feature, not a bug, going back to the Doge cuts of last year.
Yeah, I'm watching the Dow right now. It's trading up 254. So let's talk big picture. What does this mean for the overall economy and a possible cutting of interest rates again?
Well, the Fed has basically given us that present of three straight rate cuts, rate reductions at the end of last year. And I think, barring any sea changes in data we'll be monitoring going forward, that they are disinclined to make any big changes from here. First of all, their benchmark rate, which is a short-term interest rate, not a long-term one like mortgage rates, has only limited impacts. And with the prospect of further rate cuts, on the minds of investors and others, that's not going to make a world of difference for the average American if they even were to do that. I don't think the last three rate cuts have had that much of an impact for most households and individuals. But for the economy, if we can keep the job market steady, perhaps grow a little bit more than it has been in 2025 with that rather lackluster monthly payroll gain of 15,000, that would be a welcome sign. It would help workers.
Mark Hamrick from Bankrate, thank you.